So here we go. But this is the weekend Tortoise strategy report review for August 8th, 2015. The market is in sideways normal conditions. That is the least normal condition of all. It stays there less than any other time. What this means is that I am much more inclined to day trade rather than swing trade. I'm more likely to take my profits intraday, less likely to hold positions overnight, because the sideways nature of the market around the 200-day moving average causes it to have little follow through until we get some distance away from that. So sideways normal. On an annual basis, using weekly RSI 14, we're in the middle of that band, so we're neutral. And then looking at the 10-day health check, using the 10-day NDX, we're in the low end of neutral at 33 out of 100. Market mosaic, price with respect to the 200-day moving average is red sideways. It's only 0.97% above the 200, so we're resting right on that very critical support level. Slope of the 50 got worse this week. It is now red bearish at minus 0.11. The ADX is still a very weak, untrending 14.2. The risk index is the 30-period moving average of the VIX divided by the 10. That gives us a score right now of 1.117. That's in risk on conditions because the threshold between risk on and risk off is 1.0. When we take that score of 1.117, compare it to the last 5,000 trading days and find the average and the standard deviation, that gives us the risk Z. That number right now is 1.37. Or I'm sorry, 1.32, and you can see a 90-day histogram of that indicator here. We've just completed a 3 sigma move from minus 1.5 to greater than 1.5. It had a slight decay, and then the volatility still has not really picked up, and we've got this little uptick, and so that actually bodes well for the long side of the market here. That's failure to fail further, failure to have additional volatility events. And so on the one hand, the long side is still favored. On the other hand, we're still at an extreme reading above 1.0 on that one, which says that the volatility regime could change at any time. So this does not change my posture of being a shorter term trader right now. Looking at monthly rebalancing, our next reevaluation is due on or about 1 September. We're holding these symbols in the 3 Etf portfolios, and then you can see the holdings on the basis of Friday's closing price, still being dominated right now by the U.S. large caps, particularly the defensive sectors like staples and healthcare, and financials have also been doing very well. In ETF2, the theoretical exposure of the models at 20%. The model portfolio itself will be exposed at 80% with stops in place. Just a quick look at those ETF portfolios now. You can see they're still dominated by cash holdings on the ETF 13 and 32. And then the ETF Max shows some symbols that are at the top of that 1100 ETF database, and some things to just take notice of. The biotechs had a tough week here in 4th position, losing almost 7%, but they're still green on the 3-month and 6-month, and so that looks to me like a potential opportunity for buying on dips, because that has been so strong for so long. There will still be some buy on dip people out there. You can see the NASDAQ biotech here, IBB, is in the same boat. It was down 4%. Dynamic Healthcare was down 3%. So that looks promising. On the upside, Market Neutral Momentum Fund, MOM, in 2nd position, turned in a pretty stellar week and month, and is doing quite well on the blended portfolio as well. So that may be one we want to look at adding. India's consumer ETF, INCO, in 24th position, had an exceptional week and month, as did the India small cap, so maybe we're starting to see a little bit of recovery in those areas. Moving on to the S&P 500. Netflix continues to reward us for paying attention now on an intraday basis. In the first position, it had just an exceptional week and month, and so that remains an outstanding target for stalking the intraday volatile moves. It's hard to argue with that. It's interesting to note Royal Caribbean Cruises in second position right now. My wife is at a meeting right now where she's working to coordinate a cruise for next year for a bunch of the local families. I'm not going on that because I'm afraid of the water, and there's no internet connection. But Royal Caribbean, on the news of the Kansas cruise, had a nice week, a really nice month, and is still leading the way here on the blended. Cablevision had been exceptional on the 3 month and 6 months, still is, but is down 8%. So that gives us an opportunity to look for intraday trades. Martin Marietta in 12th position. It was up 7% for the week, 14% for the month, and it is looking strong. And so those are going to be some interesting candidates for us to look at as well. So we want to look at Netflix, that momentum play. I think the healthcare, certainly, Cablevision, Martin Marietta. Those are all going to be on our short list. Okay. Next up is the market health check. And these vertical blue lines are 10, 20, and 30 days worth of look back. The thick lines are 30, 60, and 90. The horizontal purple line is the resistance level at all-time high up here at just under 213 in the S&P. And you can see that it has acted as a resistance 3 times now. The dark blue shaded area in the middle is the river. That's the 30-period Bollinger Band, plus or minus 30. Notice how wide the river has become compared to when it was trending. This is a sign of that recent chop. The outer blue shaded area is the floodplain. That's the 30-period Bollinger Band, plus or minus 2. This red-looking shaded area in the background is the dragon. The sine wave is the 30-period regression line slope. And you can see that we are at a peak up right now. It's as high up as it's been in the last 4 months, except that one moment back here in May. So this is actually an interesting moment in the market. If it can hold support here at 208 in the inside the bottom channel of the river, we will put in a low and then 2 higher lows, and then postured for another run up at 213. Even though this has been just sideways chopped for 4 months, that oscillation between 204 and 213 has had some tradable moments for the shorter term traders. It's been tough on the swing trades, no doubt. And in this kind of a market regime, we would not be wrong for wanting to harvest our profits earlier rather than holding out for some of the second and third legs up. This is definitely one where we want to smoke them if you got them. You can see how close we are now here, about 1% away from the 200 period moving average. That puts us into the sideways channel. You can see we're about 3% off the swing high. This blue shaded area down here to 204.5 is a 5% sell-off, and so I normally treat that distance from the swing high to 5% as noise. It's market's still chopping around, and you can see we've been in that chop for 4 months. So it's you could be led to believe this is normal, and it has been normal lately. You'll see the 10-period regression line and channel sloping slightly downward. The 30-period lag by day slightly upward. Price is located midway in the bottom half of the river. Next, I see some support down here near the river's edge around 207, and then the 200 period at 206, and after that, it's look out below. The jaws of PPO are pointed downward. We're closer to oversold than overbought, and so again, this is still a trader's market with shorter term. Lack of conviction traders being rewarded, if I would say, where a bird in the hand is certainly worth two in the bush. This is the ETF2 index model, and you can see that 8 of the 10 international sectors, the big broad indexes, are on cash signals. That puts us in the model at a theoretical allocation of 20% invested, 80% cash, down from 30-70 from last week, sideways normal. Right now, the S&P at 72 is co-equal with the globals, also at 72. Inside the U.S., it's technology at 78, then large caps at 72, and then mid caps and small caps tied at 71. The two strongest sectors are Japan at 77 and technology at 78. The two weakest are Latin America and emerging markets continued. Inside the U.S. sector spiders, it's healthcare and consumer discretionary certainly leading the way. Financials at 78 and consumer staples at 78. So really it's being dominated right now by the defensive plays. I want you to notice that XLK, which is a broader aspect of technology than the Qs, has not shown the same strength as the QQQ does. And that's because the Qs are dominated by a couple of those large caps that had just extraordinary couple weeks here. And so, if anything, the technology sector, other than Amazon and Google, has not really been all that powerful. So a word of caution there. Inside the world market model, little change from last week. The U.S. is all above average. Japan is above average. China has tipped back slightly above average, but a mixed bag inside Asia less Japan. Brazil and Latin America still suffering and lagging. Mexico is above average. All of Europe is above average, with Belgium and Netherlands exceptionally strong. The alternate assets like treasuries, corporate bonds, and real estate are looking to be a little better. Healthcare has been consistently strong across the board, both U.S. and globally. So I continue to look for that trend to persist. Looking at the ETF top 30 through the ETF2 lens, again, we have biotechs at the top. The three new ones that relatively new are the ones that are green and white. So that's healthcare, healthcare, healthcare. You sort of getting the message that healthcare is the place. Consumer discretionary is looking good, and home builders, XHB. So green and white are things of interest. Next up, inside the Dow, through that same ETF2 lens, Nike and Goldman are still exceptional. JP Morgan, Visa. So you can see 3 of the top 5 are in that strong financial sector. United Health, Home Depot and Pfizer have moved up into this green and white. So Pfizer, Home Depot, and Goldman Sachs are going to be on my list to examine. So Pfizer, Home Depot, Goldman Sachs. And I want to shift now to the daily report. All right, so we've got a channeling here in Goldman Sachs that makes us like that. I like this here in Procter Gamble, 10-1 on the auto frame, actually 11-1 with a 5DD, and it closed in a doji. So Procter Gamble, very interesting indeed. Apple is in the number 2 position on the auto framer, and Dupont is in number 5. It's also a 5DD, and it has a 1 on the RSI2. You can see its performance over the last time frames have been just horrific. So that actually makes it a good one for us to look at in terms of recovery. So that's the 5DD. And then Verizon also has a 5DD. So we're going to add Dupont and Verizon. Inside the ETFs, we've got an overreaction on the long side here with XLY, 2 5DDs in Brazil and Latin America. Brazil exceptionally nice at 2.9-1, and it's the only frog we have, and it's a 1 on the RSI2. So that'll give us something to look at here. So okay, and we're going to look at the auto framer real quick. See if anything grabs us on that. You can see just the power in, let's see, Procter & Gamble. Disney is 6.2-1 on the auto framer, so we'll take a look at Disney. Looking at the fractal framework. These in the top shelf are the ones that are the most ATRs below their own RL270 or the long-term fair value. So that gives us a belief that we're looking at value opportunities here, quality on sale. So DuPont, United Tech, 3M, Procter & Gamble's on there. We'll also take a look at Walmart. That's actually been on our list here for a couple of weeks. And then the strength leaders are the ones that are in the red in the bottom shelf, and these are the ones that are the most ATRs above their own RL270. So things Coca-Cola, Nike, Microsoft, McDonald's, JP Morgan. These are the ones that are leading the way, but you can see that they've pretty much caught up to their own RL270, so they'd be fairly valued. We're going to take a look at Microsoft and Nike just as a point of comparison, so we can see what those look like. You know, the different style of chart that you would see based on above or below its RL270. Okay, so that gives us a stack to look at. So let me get this up on your screen. Okay, so let's take a look first at Netflix. Well, actually, let's look at the market first, SPY. And so here we are at SPY. We're at the bottom of that river. You can see how choppy the market has been. The dragon is sloping downward. The RL10 is in the dragon and getting ready to drop out. So that's actually a negative posture here. If the RL10 continues to drop out of the dragon, it will probably take one more day to do that. That sets up a reason to go short with the target of the previous support levels down here around 204. On the upside, if we get some support placed in here, and you notice the long wick, if we do get some support, then we would have had one support level, a higher support, with the argument that we're looking to get back to 213. So either way, the market is postured to chop in either direction. It would not be surprising. But you can see right now that the dragon is sideways and right in the middle of the river. It's straddling the Bollinger Band mean. You have the 10 period here and the 30 period here, the regression line. So everything is well inside the river. So this is a pure sideways quiet channel. And so it's equally likely to go here or here. And so there's no market direction to take. And that's why I'm ready to be a intraday trader primarily, because I don't see any real compelling trade in either direction here. Okay, so now let's look at some of our symbols. So now it actually pays us to look deeper into individual symbols to see things that are separating themselves from the market, and looking to get some one-day pops if we can. All right, so this is Netflix, and I just want you to notice how strong the size of the ranges have been. There have been a lot of signal moves in Netflix. It was almost up here around Z-3, has had an orderly pullback for 3 days, actually 2 days. The dragon is out of the river, halfway out of the river. The 10 and the 30 is out of the river. So this is one that if you get any kind of, and if it goes above 127, you can auto buy that, because that's going to be the perfect continuation pattern. So if you get something like this and off it goes, then you're going to see swing low, higher low, higher low, higher low, and the RL10 is already out of the river and being nudged north by the dragon. So Netflix, I certainly have a long side bias on it. If we do get a crack, then this support down here around 107 is going to be really strong. So I'm ready to buy any dip all the way down to 107 because Netflix has just been so strong. So a lot to commend it to us right there. Let's see. Next one up is, let's take a look at this is actually a new one for us, this MOM. Don't really know what that one is. Oh, that's that momentum ETF. So it's a technical trader. Doesn't look like it has enough volume really to be all that interesting. Maybe on a swing trade basis, but this does not look like a tradable candidate to me. So it's coming off my list. Not interested. But you don't know until you look at them. Next up will be XLV, or healthcare. Now you can see longer term, this has been going through some cycles and oscillations, but generally the 270 has been up. And so that actually postures us in a nice place to look for entries into this, the strongest of the U.S. Large cap sectors. So if we were just to draw this connection, there's some support all the way through here. And the 270 is sloping up, and it's located near the bottom of that range. So that's actually a really good place to be looking for entries. So I like XLV here. CVC is Cablevision. This was another one of those BMR winners. This looks very promising. There's a lot of volume. Huge range day for each of the last 2 days. You see how far it rebounded off the bottom. Down here around 24 is a long-term fair value. There was quite a lot of buying pressure between 24 and 26, and so I take this one as an intraday momentum play. Could be very interesting, but you know, let the buyer beware on that one. So that has some potential if nothing else is going on, but it will be on my radar just because of how strong it's been. Next, we'll look at MLM, which is Martin Marietta. Also very nice. The 270 is strong and up. It's had this nice move from the breakout here. The dragon is well up. The 10 and the 30 are out of the river. You can buy this on a breakout above Friday's high. That one's looking good. Pfizer is next. I like this one a lot. We had a good recovery after this after 2 days of harsh selling. Came down, found support above the Bollinger Band main, closed well, gives us a nice target up here around 36.40, and we're down here around 35.30. So really, with only about a 30-cent range risk, we have a nice opportunity for gains inside Pfizer, and finding support at that level, we would have 1, 2, and 3 levels of support. So that one actually looks pretty good. Right in our wheelhouse. Home Depot is next. Home Depot actually closed higher than it opened, so that's also a very strong site. The RL270 is still well above, so we have price targets above. Held support at the southern skin of the dragon. The dragon is sloping up. The river is up. The 90 is up. The 30 and the 10 are both outside the river. So we have we have a price target up here around 120. That looks really strong to me on Home Depot. I'm ready to buy a takeout of Friday's high. I really like Home Depot there. Goldman Sachs up next. Well, this has been the strongest of the banks, of the big banks, and here's a chance to buy it down around a triple support level around 202. This is in a perfect critical state. If it collapses here, then it's look out below. But if it recovers here, you have a target around 209 at the 270, 209 also around the Bollinger Band mean, and then this previous swing high up here around 216 in this region. So lots of room for the upside. If we want to consider what might happen if the market cracks here for financials, we got to go back and take a look at previous support levels. And then what we would do is we would look at this price level here. Yeah, there a lot of resistance, and there was a lot of resistance before, and then support around 200. So, and if that breaks, the next big volume spike was down here around 192. So those are the two price levels. Yeah, right in here. Targets on the downside. So if we collapse, it goes here, and then we want a second scoop short to go here with the price target down here. And then our final third could come all the way back to there. This distribution right in here does not look very promising. You notice the last time there was a pullback, there was some immediate recovery and rebound, but that didn't get as high, and now notice the slope is down. So to me, Goldman is in a perfect critical state for both long and short, and it should be on our short list simply because there's so much conviction in Goldman. And if it cracks, look out below. To me, the short side trade on this one is very exciting because financials have been strong for quite a while now. And here's a leader that has been not been able to hold up. So the bull is dying there. Time to feast. On the other hand, if we took a look at something at the other end, American Express, it's not on our list, but because that has been at the other end of the financial sector, here's one interestingly enough where you can see the 270 is down, but it was up 6% and it closed right near the high, so there was a lot of conviction on this one. And so AXP, I think we should add to our list. It cleared and held above the last hump of the dragon, cleared and held above the last swing high, and this is really contra the previous trend. So this looks to me like something special happening here. While we're in the neighborhood, let's take a look at Visa. Now here's one where Visa is halfway between those two. It wasn't a leader like Goldman, but it didn't, and it hadn't suffered like American Express, and the pullback was much less. So it's still in this 10-day nice little breakout trading range, and showed some strength on Friday. So I actually like this one as an alternative way to play the financials. I see the price target up here around 77, and I'd be willing to buy a breakout above the high around 74.5 with an idea of getting to 77. But a collapse here gets it down to the Bollinger Band mean, so that's going to be a nice trade as well. If we see weakness in the market and the financials, that one should be pretty good. I think Goldman, however, is more likely to be the one that is collapsing. All right, let's look at Procter Gamble. This is that legendary 10-to-1, or 11-to-1, I should say. Oh, yeah. This is right in the wheelhouse. This was big collapse, and now you see the slope has been steadily down, but there has not really been panic selling. There's been some recovery off the lows over the last couple days, and so the dragon is now halfway out of the river, but we've had a 2-day failure to fail further, and it actually made a slightly higher low, and it was an inside day. So the lack of volatility, failure to fail further, makes me very interested in Procter & Gamble. So I'm willing to get long on this one as soon as it takes out Friday's high. My targets are the edge of the river, then the Bollinger Band mean. I'd even go intermediate target here at the 90, and then the RL270. And then on the other hand, if it collapses below 75 and a quarter, then it's more of the same, and it's another one of these big sells. So this is a perfect critical state in Procter & Gamble and should be in one of your top 3 trade frames as we go forward. Let's look at Dupont. Dupont has been a great intraday trading vehicle for us for the last couple weeks, and no reason that should cease now. It's given us support here, but a collapse below that is an auto short. I want you to notice that the dragon is completely out of the river. It's hard for it to stay that way, so it has to collapse pretty soon. And the 10 and the 30 are both outside the river and failing. Slope of the river is down. I mean, this is just, you have to short new lows of the day on this one. Are there some opportunities intraday on the long side? Certainly. Take a look at the size of these range days. So there's a lot of room for it to move, but that's also in a perfect critical state for us. Very low risk trade. Let's look at, I want to look at, while I'm thinking about them, a couple continuation trades on, let's see, Bristol Myers was very rewarding the last couple days. As you can see, the intraday trades on this one have just been textbook. So if we get any kind of intraday weakness like on a Z3P or a frog box going short, I'm certainly going to take that one short because it's breaking down to new lows. On the other hand, you can see that the distance between the RL10 at 64 and the RL270 is enormous. And so that sets up a long-term cognitive dissonance between the long-term traders and the short-term traders. This would not surprise me to see that be a bottoming tail, and so I actually am very ready to trade this with the idea of getting back to the Bollinger Band mean around 67. But again, if we get weakness intraday, I can go short that one with no hesitation either. So very nice critical state for Bristol Myers. Eli Lilly has been another one of our trading faves intraday. And again, look at the size of some of these ranges. I mean, these will make you salivate as an intraday trader when you see moves that look like this on these days. This one, which started up at the top and then just got crushed all day, opened up, got crushed all the way down, and then rallied all the way back to the 270, and now it's right at the 270. This is a perfect storm right now for Eli Lilly. What is the, it was an exceptional outperformer all the way up here, but it now has come all the way back to the RL270, and now the 10 and the 270 are all in agreement about price right here. Is it like that, or is it like that? This would lead you to believe that it's down. And so I'm ready to go in either direction. And the reason that that's interesting is that the size of the move away from the RL270 at this last max excursion, this distance up That's how far it can go to the south, going down. And we've already seen one nice leg down here. And you can see the dragon just getting ready to leave the river, as is the 90. The RL90 is rolling over. The 30 is rolled over, getting ready to depart the river. The 270 is starting to stall. This is one that's had its day, and it's had 3 weeks to recover and hasn't really done it. So weakness in Lilly can be shorted. All right, I have another webinar to do here at 8, so I'm going to go ahead and close this one out after we take a look at Brazil as our last one. I always like to look at Brazil. It's a great frog candidate. It's a great swing candidate. Has lots of volume, lots of volatility, and often moves according to its own. You know, we're still short it from 30 back here, and so this is just what failure looks like, and lack of conviction. And so any new low of the day, I'm automatically shorting it. And now this distance, I want you to note this distance above the 270 on its last favorable excursion, that's how far below the 270 it can go this time. So if we take that to be about, from 32 to 20, so $3 below, this thing can get down to 24 with the amount of pain and suffering that we see in it right now. So Brazil continues to be rewarding us on the short side. So it's a good intraday candidate, and that's one I could be tempted to hold overnight. All right, that's everything I got here. I'm going to go ahead and if there's any questions, go ahead and shoot in me real quick. Otherwise, I'll get this video processed, and then I'll get this hung with these trade frames and posted in the chat room for you as well. There have been some just extraordinary work going down inside the chat room. You need to be looking at those archives on your spare time and studying those concepts. That is some of the highest quality work that we've had in a long time, maybe even ever. So hat tip to all the guys like James and Sonal and Jeff and Clark. And Susan has been posting too. Like, she's been doing a great job in her own shy, quiet way. So proud of all you guys. Keep up the great work. Catherine, it just is amazing. You know, what the work she does this week on rig was just out of this world. So so much respect for you guys. Keep up the great work, and we'll see you in there, and let's get after it this week and keep refining our practice, make those bricks, build those walls, and keep going. So take good care.